Michael Burry declaring that he has over $1 billion set of put options on Nvidia and Palantir. I think I have a good investing process, but probably more importantly, I have like a process to improve my process.
When the value remains obvious, then when the price goes down, you're getting value. I mean, you're buying a company at a better value. And that volatility in that way is your friend.
The sands are shifting and you don't want to get caught with your pants down.
For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife.
Welcome to the Deep Investing Jungle with your hosts Luke the Badger Hallard and Krzysztof the Monkey Piekarski. Hot in the news this week. Are we in a mega bubble with AI? We're going to explore the bull and the bear case around that and also look at what a couple of other super investors are doing. I'll tell you what I'm doing. I'm going a bit risk off. I've done a whole bunch of trades in the last 2 weeks or so. I'll share some of those on today's pod. And Krzysztof, you have GameStop 2 all over again for us with a stock you're tracking, GNS.
Yes, sir, Badge. Rumor has it that you did a little bit of homework this weekend. Monkey assigned you the task of seeing one battle after another, which for me was one of the best films of maybe the last 5-10 years. I was just so profoundly excited and moved by it for all kinds of reasons, political and literary and cinematic. How'd it go for you in your home cinema?
Like I was keen to watch it because you were like hyping it. And then my buddy Tom said, he wasn't taken with it. So I just like, I'm not going to go to the movies and see it. I'll just watch it when it's available on streaming. And I caught it over the weekend and it's superb. Yeah, really enjoyed the movie. Very good. Paul Thomas Anderson. I'm going to have to go back and rewatch like a bunch of his movies because I loved Magnolia. I haven't watched that for like 10 years. So I'm going to go and check it out. But yeah, it's hilarious. It's kind of scary. Like I was visiting the States recently, but I haven't seen like some of this like essential like civil war that's portrayed in the movie. And it's kind of cartoonish, some of the stuff. But like, is this really what's going on the ground in the States?
Yeah, funny you say cartoonish because the source material is from a Thomas Pynchon novel, and that one he wrote on a kind of comic book register. So P.T. Anderson played with that a little bit. I mean, I don't want to. God, yeah, spoilers. We don't want to spoil things. So, right when ideologies get so, so stretched to their extremes, it almost feels like we're in a cartoon. But on the ground, it's kind of weird. Yeah, like reality is stranger than fiction. And the extent of the polarization here, I don't think it's getting better. And so seeing the United States, I mean, it's a kind of modern reworking of what was happening, long ago into, I mean, the original novel Badger takes place in California, kind of when the hippies had their day, and now we're in the Reagan era and corporate interests are taking over. And it's about kind of, if I could say this without spoiling anything, it's about how some ideologies get corrupted from both ends. Like the people on the left get corrupted, the people on the right get corrupted, and you have this kind of weird zombie thing trying to, make its way. And it's strange, man. It's a strange moment to be alive in. And I thought the movie captured that with both political and ideological clarity, but also humor.
Yeah, it's really funny. DiCaprio is hilarious in it. Sean Penn is superb.
Yeah.
Like I love the character he's playing. And it's very funny. You're right. Yeah. Okay. Which we shouldn't say too much because we don't want to spoil it. And it has just come out.
Yeah.
We'll give our listeners like a couple of weeks to check it out.
Yeah. No, definitely go. I mean, if there's a movie to see, go see one battle after another. Trust Monkey on this one.
Are there any like investing lessons in it? I haven't thought about this, but
investing lessons.
Yeah.
Oh, yeah, I could think of one.
Done.
I mean, it's a stretch. It's a bit of a stretch. But I think one of the key plot points and ideas is that when you get committed to a certain view of how things are, you end up looking silly. And that reality, I would say, is always more nuanced and more mixed and more. You gotta flex. You have to move. You have to adapt to what's needed in the moment, as opposed to this is my stake in the ground and I will forever hold it till something breaks. And I think being a little bit more nimble in how you approach investing would be my translation.
Cool. Yeah, that's definitely important. Like the world changes, and if we get stuck in our like the path we've always trodden, either you miss opportunities or you just make the same mistakes over and over again. Like I've always said, I think I have a good investing process, but probably more importantly, I have like a process to improve my process. I'm always doing like annual reviews and looking and trying to like figure out how I get better as an investor, because I'm like 22 years into like 1,000-year journey.
Yeah, absolutely. It's like the machine that makes the machine, and it's a little bit of contradiction in terms. You have to stand for something, right? I would say that that's where you start, like politically or in life or in investing, you have to pick a game and you have to learn those rules, right? That's the fundamentals part. But then probably after you've mastered them or you know what you're doing, then you could check back self-reflexively and kind of start, playing around the edges, knowing what you're departing from enough so that rigidity doesn't capture you. And I see this actually both ways, actually, from, because since I've been kind of weaving in and out of the long-term or short-term stuff, kind of trying to get my footing like a surfer might. I think the error happens in both directions. Long-term investors sometimes, like once they select a company and say, I'm in this for 10 years, then it's harder for them to admit that the times have changed and make revisions to a thesis, say.
Or even like your own interests have changed. Like I'm going to talk about a bunch of trades I did in the last couple of weeks later in this episode. Like honestly, there's a couple of stocks I bought into like a year ago, and I just haven't fostered an interest in them. So like I shouldn't own these things because I barely understand what they do beyond like the headlines. So I'm clearing them out of the portfolio.
Yeah, right. And then there's stuff like in a more trade-like venue, there's some people that I think completely ignore fundamentals. I mean, if you're calling yourself a day trader, then that's part of the game. You don't care. You just react to price. But I think there's more, sophisticated people that pretend, that they think they're doing something in the middle, but they're not. They're too caught up in the price stuff and they can't adapt to the larger picture. And so always middle ground, right? You always kind of want to find a more skillful middle ground from which to operate. Learn the rules, learn when to break them later.
Yeah. And we're in one of those points right now. Like let's turn the conversation to our headline topic for today's episode. Like, are we in an AI bubble? The world is changing. The sands, literally the sand, because like the semiconductors are made out of sand, right? The sands are shifting, and you don't want to get caught with your pants down.
Yeah. You know what this reminds me of? A little bit of, I guess that's the intention of like, what the people in France during the French Revolution were thinking. Like the aristocrats, everything's fine. until everything is not fine.
Yeah. Well, let's look at, I said at the top of the episode, right, a couple of super investors, inverted commas, at least, famous investing folk, are making some fairly big moves. And I made my changes before I saw any of this stuff, but it does give me not pause for thought. It does kind of encourage me that I'm thinking in the right direction with going a bit risk off. But in the last probably 2 or 3 trading days, we have seen Michael Burry declaring that he has over $1 billion set of put options on Nvidia and Palantir. And then you've also got Palantir co-founder Peter Thiel has sold his entire stake in Nvidia and the large majority of his Tesla holdings. And then also like Masayoshi and SoftBank, they've sold their whole stake in Nvidia for nearly $6 billion 6 days ago. Like, we're recording on the 17th of November. So like mid-November, you've got a couple of quite prolific folk there who are, I know Burry's always been a bear, but Thiel and SoftBank definitely not. So the fact that they are, I don't know if they're short the market or they're just basically like releasing capital from these like big AI stocks, predominantly Nvidia. That's the one that crops up in all three of those stories. That's kind of telling, I think.
Well, telling. Okay, let me offer the counter view on that. And by the way, I think my own position is quite ambivalent. I think I will say at the end where I ultimately land, but I am definitely not in a binary. I'm not looking at this in a binary way. Just let me state that up front.
And maybe just for the purpose of this, let me say as well, like I'm also, if anything, I'm probably an AI bull. Like we'll talk about what I've done and why. It's not because I'm bearish on AI. But yeah, so let's explore the bull and the bear case. I think there are strong arguments on both sides.
Yeah. So, but the thing you just said, here's the caveat I want to lay out front. This is a little bit from, I would call the medium term players in the market, the short medium term players. You know, those guys, that game pays very careful attention to inflows and outflows of capital, and it's you know, kind of price centric first. And over the years, what I've learned, and I think I really believe this, it's not even that I believe it, I've seen it with my own eyes. What retail investors forget is that any fund with billions of dollars in assets or hundreds of millions can kind of make the price go where they want it to go. And that's hard to accept for retail, right? Because when we make a trade, it literally will not ever affect the price at all. But we know this is a kind of Machiavellian space where people are always trying to do things for their advantage. And one of the core playbook moves is when there's fear, when these big guys sense fear, they deliberately try to drive the price down by selling or doing whatever fancy shenanigans to do that, using options and derivatives and whatnot. Therefore, in a sense, confirming that the fear is legitimate, right? And all of a sudden, the retail investor sees over like what we experienced last week, prices dropping 6% one day, 7% the next day, right? Then the short-term traders get their stop limits hit. That forces more selling. And now you have real panic, right? That's what the retail investor feels, sees, and they all of a sudden start selling. You know what the big boys are doing? They're like rubbing their hands in glee, saying mission accomplished. We got exactly what we wanted. We wanted these shares of, call it Iron Energy, but all of a sudden it got to 80 a share. We know that's too high. We're going to drive it back down to, at the moment, 49. We get all these sells, and now we're going to load up heavy with like long-term options or whatever, so that when it inevitably rebounds, they're going to make their hundreds of millions, and retail, as usual, bought high, sold low, and so goes the game. That's one view. That's kind of cynical, but I think it's more true than not. What do you say to that?
Yeah, I think that's some of it. Like, that's not, I don't think that's like the overriding thing. And probably that's more in like smaller companies like Iron, where if you've got like a couple of $1 billion, you can't move like a stock like Nvidia. But you can absolutely move like sub $10 billion companies. And you can do that by, also by writing like short reports and doing all sorts of other, supposedly market transparency, but also like verging on market manipulation type things. So it's a factor. But is it like the main factor? I don't know. Like, it feels to me like...
Well, Badger, actually, sorry, let me say one thing. It's not, let's not think like main or not main, because it's a confluence, right? It's a complex system. So there's lots of things. I think all I'm trying to say in terms of education is, and this stands no matter what degree of it is, the short-term price that you're seeing is very likely a short-term way to psych you out of a position based on fear principles. And if you have done your work, don't fall for that particular gimmick on its own, just on what the price is telling you. That's all I'm saying. And it's part of the game.
That's that. Like, it's easy in some ways to protect yourself against all of this stuff. And it's just about like the things we talk about every episode, about being in the mastery of your emotions, having a plan, not reacting to what's going on, trying to take a long-term view, unless you're deliberately doing short-term things. Take a long-term view, like ignore the next year, the next 2 years. If you can do that, you're kind of immune from these kind of factors. You can't ignore everything, right? There are some fundamental things happening in the world which will probably influence, like, say, the 5-year horizon for a lot of these US tech companies that are grounded in AI. And frankly, we don't know how these things are going to play out. And I can see supporting forces that are going to continue to push valuations for these companies up and up and up. And I can see like a lot of rugs that could be pulled out.
Yeah, so shall we talk about let's get into the what we're seeing in this moment, right? After this weekend where there's all these big boys selling out, and you want to take the bear case? You want to talk about first, like, why things look kind of scary?
Yeah. There's a bunch of things. Like, I don't know which order to tackle these in, but let's just hit like one of them because I think it's quite interesting. And it's just like this incredible level of CapEx spend, like basically money that Alphabet, Meta, Amazon, all of these guys are spending on AI hardware. And like, if I really pare it back, like, they're literally, like, some of these companies are committing essentially like trillions of dollars over the next couple of years in buying hardware. And there's a couple of things that could go wrong with that, right? We had like the DeepSeek moment like a year ago when we all panicked about Nvidia a little bit. We did a whole episode on that because it looked like, oh, there's these other models. You don't need these masses, like huge data centers and masses of semiconductors and chips and GPUs to do AI. You can do it with really highly efficient models. And a lot of these models are coming out of like Chinese labs. So maybe the Metas and co are spending a ton of money and they don't need to. And then another sort of related to that same point is they're spending all this money, and it's not like you've bought, say, like, I don't know, like a car, and it sits in your driveway and you use that car for like 10 years, and at the end, you sell it into the secondhand market and you buy like another car. Like, they're spending this money on technology which is sort of subject to two quite difficult forces. One is the depreciation is so rapid for like if you want to buy like cutting edge hardware from Nvidia, well, it's only going to be cutting edge for like 6 months to a year, and there's like another generation coming down the track, and you need like the next thing. You don't need this old thing because it's basically like it just doesn't cut the mustard. And obviously in a data center, and you have like a massive thing, you have all of, if your older generations and you have your new generations, and you continuously try to manage the cycle. But like the useful life of some of this investment is actually probably relatively short compared to a lot of other CapEx investment. And I haven't done any like fundamental research on this, but the other thing that's dangerous with this stuff is like the workloads running through GPUs are really intensive and they run really hot. And so actually these chips can essentially like burn themselves out. And that happens to some degree, like there's some percentage failure every, 1,000 hours of usage. But maybe we are seeing a higher level of degradation in some of this hardware. And so what does all that amount to? Like, A, are these companies spending too much money? And B, is the money that they've spent actually going to be useful for that long? And they have to just continually spend trillions of dollars.
Right, which obviously they won't have. You can't keep, they're not making trillions of dollars. I mean, as much money as Meta and Google and all these companies make, I mean, it's massive, right? There are caps, right? There are limits to too much. There's something called too much. I don't know. That point, it's concerning to some degree for me. But I kind of feel at some point maybe there's going to be a plateau. And mind you, this is a non-expert's opinion. I could be completely wrong about this. But just because, let's say, the rate of improvement with the GPUs was so stratospheric up to now, does not mean that necessarily the next generations will continue to have to increase so much that the older GPUs from, like, as you said, 6 months or a year ago are now like useless. I mean, that exponential curve is steep, but at some point it's good enough, or it's plenty good enough. I mean, I know this is an imperfect analogy, but the MacBook Pro that I bought, that I'm using now, when I bought it in 2021, I decided to get the complete, maxed out chips, the M1 Max Pro version, whatever. 4 years later, badge, almost 5, and this computer is still shockingly powerful. That it's running multiple screens and doing all these things in computer years. That's a long, long time. Right? 5 years. As imperfect as that analogy is, let's say you buy one of these Blackwell whatevers today for an obscene amount of money. The AI tasks, I mean, maybe they won't be good enough, say, to run a fleet of cars, because those always need the fastest, quickest, but to run inferencing and to run, whatever training models, even if it costs you half a millisecond, So I'm guessing there's going to be a plateau, and you won't need to deprecate all of it. That's a fee. It sounds scary, but
Yeah, I don't think this stuff becomes like instantly valueless overnight. Like it will be scaled down, it'll be used for other things, but like the peak demands are just increasing. Like every time, like Gemini, really, there's a new like Gemini model or ChatGPT 5 and Pro versions, and now we're going into like agentic AI, which is like a massive like paradigm shift. AI is no longer going to be about like asking questions and getting answers. It's going to be about AI doing stuff for you, and you may give it a task, and it might have to go away and work on that for like a day, and come back to you, check in with you, get more information. And then like it's achieved your goal, whatever that thing was, some huge piece of research, maybe, furnishing the house you just bought. Like these are legitimate tasks that we will use AI for. And so, like the demand is going to be increasingly high. And so that's like a bull case actually, because, there's real economic value of AI doing real stuff that we will all find useful, and the customers, these companies, will find useful. But it's also a kind of not so much a bear case, but it's also like another reason why this CapEx spend has to just continue and continue.
Yeah. So, okay. So let's on this point, I'm saying because of the massive increases in power and speed for the last however many years that the chips have just been being upgraded over and over again, they've become good enough, and they're going to stay good enough for much longer than the bears say, where you'll need to update to the latest thing or your previous stuff is garbage. So I'm not buying that bear case exactly. I think that the pace will just be much slower and more manageable. All right, so what's next?
Well, it's like, I think this is the core argument now, right? So we're spending a crap ton of money on this stuff. And really the core argument is like anything, right? You make an investment in something and you expect to get some kind of return out of it. Like I buy a car, I expect it to be able to take me to the shops and take me on vacation and play like video games at Tesla and have Tron mode and do weird shit, right? So we're spending, as a society, these tech companies are spending a ton of cash on AI infrastructure. Like, it's kind of doing fun stuff, and there's certainly signs, like we're getting real economic value out of these tools, but will the economic value ever kind of reach the point that it justifies that crazy ongoing level of investment? Like, I think that's a legitimate question mark. And to me, that's like the big rug. That's the big one where, Meta spend trillions of dollars of CapEx on AI, and they then make these capabilities available to like their users on Facebook and Instagram and WhatsApp. And maybe they sell some like cloud type stuff. They don't really do that, but maybe they do that in the future. But if they can't recoup and make a profit on like the investment they made, then that's a pretty flawed business model. And that, I suppose, a bit extra on that. Like you might say, well, obviously then that's done. Like they wouldn't, as soon as they realize you can't make enough money out of this stuff, they're going to slow down their spending. But they're not, because of this other factor of AGI, artificial general intelligence, and like very clearly Zuckerberg, but probably to a similar extent the other leaders of these competing companies, like these guys believe whoever hits AGI first is going to potentially be in like a winner-take-all situation, because they'll then accelerate past everybody else and be almost uncatchable. And so for that reason alone, that in Zuck's mind, I don't know the guy, obviously, but in his mind, I can see like he's a real technologist and he's a real futurist in the way he navigates Meta and their strategy. And well, that alone would be justification, I think, for him to spend at all costs. But if they don't win that race, or if it's actually like a false race, like AGI isn't to be found in the direction we're going, or then then they are going to spend anyway, even if they're essentially like losing money on every bit of like data center chip that they buy. So that could be trouble. I'm not pointing a finger at Meta particularly, but this same argument I think potentially applies to like all of the big guys, including Tesla, right? Including Tesla.
You mentioned Tesla, and that's interesting because I think one of Musk's recent tweets was him talking about the way the Optimus robots are going to, become the world's best surgeons. And it's straight out of sci-fi stuff. And we know Musk is a salesman and a showman. And simultaneously, he also has built the most staggering technologies in human history. So in some sense, Badge, this kind of feels to me like a almost like a, I don't want to say binary, but, two paths diverge in the woods. And one, you say you just don't believe. You can't believe. You can't allow yourself to believe that these kinds of technologies are possible. Robots curing diseases. And on the other hand, you have people seemingly far along already on the path to actually making them a reality.
I mean, let's just because I think you're making a really good point. It's a kind of a bad example with robots doing surgery, because there's a whole bunch of reasons why that will be one of the last things robots will do, as in autonomously. But there's a whole bunch of very valuable things that like Optimus robots will do as soon as they're in the general public or in warehouses or on Mars, there'll be decades where they're doing a lot of really useful stuff.
Right. Okay. So, but the same point goes, and I think for me the bear bull issue case with this is not so much will these things ever happen. I'm a bull and an optimist in that sense. I think the fundamental question is, will it happen soon enough so that the financial balance sheet doesn't explode? I think is where I'm at. You know what I'm saying? And like that the companies need to start recouping some of these investments a little bit sooner than later. And where I land on this, I'll just kind of in my mind take it case by case. Like Tesla, I think because the robo-taxi stuff to me feels imminent, I think they're going to make it. They're going to make it, and maybe that's why they become one of the world's most valuable companies, if not the world's most valuable companies. I'm betting over on Tesla. A company like Meta, say, with the metaverse, and it's been in the shadows for me, so I don't really know what their updates are exactly. How quickly will all that be able to recoup their massive investments is a greater question mark. So I don't know. Maybe they're going to suffer a major drawdown, which the recent earnings and stock indicates that's the current direction. A company like Google, meanwhile, I'd say I'm also bullish on. They're investing massively. They just announced another, I think, $40 billion in investment in Texas. You saw Buffett bought over the week, or the filings revealed Buffett bought a huge position, which actually I think is an important sign for the bulls, right? When Buffett buys your company, he's done his research. So he's betting on Google not a bubble. So yeah, I don't know how to land that, other than maybe it's also a little bit of a mixed bag. Not every company is going to do it, but I think the most powerful ones will, and they will do it in time to not explode. That's my...
I think you're right, but and I think I agree with your judgment on those companies you named, but the nature of a bubble is that when it pops, the ass falls out of everything, the good stuff and the trash, and the good stuff persists and navigates its way out of it, and then you get back to the next cycle, the new normal, and maybe the goofabets, maybe the alphabets survive. And maybe the metas don't. And I don't think that's the case, but some companies won't survive a blow up. Probably smaller companies won't survive a blow up of this crazy levels of AI investment.
Yeah, let me talk about a couple. The moment I find my own portfolio in King of the Jungle right now. I don't know if you saw, I made a couple of moves on Friday in our Dolphin trading channel. And I swapped out two data center plays, Bitfarm and White Fiber, and I added to a data center called Soluna, SLNH ticker. And my reasoning badge was, I'm sorry, in order to add to what I felt are my top two, which is Iron Energy and Cypher Mining. Or just Cypher, because they're pivoting away from the Bitcoin mining stuff. Fundamentally, I'm happy owning the top two because they've already signed deals, mega deals with Microsoft and Amazon's AWS. And those contracts are for years and years and multi numbers of billions. So that's already been signed. I want to get rid of the lower end players, call it the second tier, because bet on the best, because who knows with the financing what might happen. But I did take on more risk for high reward with Soluna, just because I think their operations are quite good. It's just the financing that's risky. Anyway, that's a tangent. All of which is to say, why am I still happy to own these data centers, because I think in this moment, I don't know if this is a good argument, Badge, but it feels like the momentum cannot stop. And when you hear all of these across every sector saying we're investing not less but more, and we cannot fall behind, plus the threat from China, plus this idea that every last megawatt will be sold, that's why I think it's a good place to position yourself. Now, is that a bubble? I mean, when something feels inevitable and there's no way but to invest in it, it feels like it's both a bubble and one that you can't afford to pop, or society can't afford to pop somehow. So other than the kind of queasiness around the financial details where those middle players, I think like CoreWeave we saw is looking really shaky, and like, yeah, call it the middle players, they're in trouble, right? Because their financial distress is greater than whatever anybody is willing to pay them. But these top players, I just don't see in the context of China, like running away with the stuff, and threatening to take over, how we say, okay, we've had enough.
It's how you're using the term top players, because like if by top players you mean like mature, incredibly well capitalized companies that can survive like a multi-year, like going into the wilderness, and everyone being quite negative on, like, let's say the value of AI, and then that's how the bubble bursts. Could be many things that cause it. Like those mega caps are going to be okay. But when you say top companies, if you're saying that to mean like companies with a really unique capability that are doing something quite interesting, but they're still like small companies that don't have like a fortress balance sheet, like some of them are going to get wiped out. Maybe sometimes it's deserved, sometimes it won't be deserved, but they're just going to, like, they won't be ready for what could be, if a bubble bursts, what could be like a really ugly couple of years.
Yeah, and maybe, I mean, this is me talking through these things with you live, so that's why when I said I sold two of those, what I call middle tier data centers, I think that's what I'm reacting to. I'm like, they're probably going to be fine because of this unstoppable momentum, but like to your point, if things really go bad, they're done. And that's why but I'm not touching Cypher. In fact, I added to Cypher, and I'm not touching Iron, because from that perspective, I think neither Google nor Amazon nor Meta nor Apple nor Tesla are going to be okay enough if they can't get the power. I mean, that's the thing you keep hearing all the time. You could have all the chips you want, but where are you going to get the power? So if Iron goes away all of a sudden, or Cypher goes away, then all of their progress goes away. Then what? Right? So I'm kind of saying, maybe I'm trying to thread the needle by saying you're right about, obviously, the mega caps will eventually find a way. But I'm also saying, or hear myself saying, even the smaller companies like Iron will, in this moment, make it, because at this point in this build out, we're in the early stages, and nobody has said anything but it's only going to increase in both pace and expenditures and so on and so forth. So where else would you get the power?
Although,
right? I mean, in other words, let me say it this way: for Iron, let's use Iron in this moment. For Iron to kind of explode, they would need to stop getting contracts. So that would mean Google, call it Google, or Microsoft, all of a sudden said, we have enough of what we need already. It's not going to be some other, call it less experienced mom and pop shop that they're going to get their power from. So that would be equivalent of those big players right now saying, yeah, we have more than we need. But what we're hearing is exactly the opposite.
But this is what you're not hearing, Krzysztof, right? You're not hearing this, Krzysztof. Like, if the bubble pops, these companies will stop spending, because if there's if the bubble pops for any of the reasons we just talked about, the mega caps will massively slow down their CapEx investment. They might write down like a bunch of like this $1 trillion of investment they've made, and they might go, okay, look, the bubble burst, we were too far ahead of ourselves, we all got excited about AI, but we need to give like the software a couple of years to catch up so that we can then generate economic value. Like, I'm just saying, this is one possible frame of mind, let's say in a year's time. And if that's where like the leaders of these big tech companies end up, then they're going to massively slow down their spend, and they're going to pause like the data center investment, and they're going to be looking at like efficiencies, either in like model design or energy usage and things like that. So, that there are very tangible reasons why, if the AI bubble pops, there might be like genuinely a need for less energy, and then that does like cause problems for companies like that. Like, I'm not a bear on this stuff. I'm just saying, like, this was one potential way outcome.
Yeah, no, I get that. I think maybe it's the larger context. I'm going to bring China into this again. I don't know how accurate this is. It feels accurate to me, so I'll say that. When you go over to China, and by the way, I've been doing some poking around a Chinese company, which if I invest in it, it might be breaking my fundamental rule of do not invest in Chinese companies ever. Ticker XPEV, but that's totally for another day. When I'm poking around China right now, doing my due diligence, I'm seeing left and right that they are kicking our ass in terms of energy generation and power supply and manufacturing, and that when you go over there, it's like living in a science fiction society that Westerners could not believe is already the case. If I think about that context and say the bubble bursting for AI, that would, I think, go hand in hand with saying we're going to let China win, or China has won. And in terms of even call it realpolitik, what that would mean for the world, what that would mean for the United States, I would venture, Badge, to say that the US would rather like overspend and make the bubble bigger and more obscene than openly say we have to stop now, because that would mean China's going to win. And I think that's one of these game pieces on the chessboard that's like, we won't let that happen. Like, admit defeat basically before, like early, saying, okay, you guys won, we can't catch up.
And look, like, Luke agrees with you, but for the purpose of this conversation, if I'm trying to play the bear, like, maybe the US cannot catch up, right? It's so far behind China in terms of energy generation and of the pace of energy generation, it's never going to catch them. So the US is then therefore dumb to play that game, because it's an unwinnable game. They have to change the game and play like a completely different set of rules that don't require like unlimited energy, because they lost that race already.
Yeah, right. And I think now we're saying sort of, the same thing, both from bear bullish perspective. Like, what do you believe? Do you believe it's more likely that the US kind of, because we fell behind, because we had dumb policies, because we didn't invest in batteries soon enough, because our grid is falling apart, blah, 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 that China has won, and now we're going to, openly kind of become their slaves, because, in the AI science fiction world, that's a possible outcome, right? Where their robots just take over. Or are we going to fight to the death? Are we going to just throw absolutely every last thing into this thing, no stop, until something literally explodes because it, the physical walls of the thing burst? And my bet, I think what I hear myself saying is it feels improbable that the country that makes Nvidia chips, the thing that runs all of it, would exceed defeat early. So I'm saying the bubble is going to keep growing.
Yeah, I mean, I agree, but not for the reasons you just said. Like, I'm still like a AI optimist and a technology optimist. But my sort of point on that stands, I think. Like, I don't know, I'm shooting from the hip here, but like, how would the US change the game? Well, like escalation of cyber warfare, maybe like turning into like a full-on actual war. There's plenty of precedent for that, right? In you don't have to go back in very far in the history books to see how economic challenges spill into like real conflict. I don't know where we go, but like some of the places we go are very bad, and they're way worse than like losing the AI race.
Well, yeah, of course. I mean, then we get into the doomsday scenario stuff. But so anyway, maybe in summary, I'm saying out of the fear place that the spending has got ahead of itself, yes, that's scary. Yes, from the pure financial perspective, it doesn't look pretty. It doesn't look comfortable. And my flip side is there is no, at this point, way out because it's an existential geopolitical threat. And yeah, and it has to keep going. And there's a real underneath it, right? So unlike the internet bubble, things are actually simultaneously being built and developed. And I go back to, is it going to be fast enough? And I think it will be. The big guns, the big players in this space will make it happen. But under no circumstances will one of them throw in the towel early, I think is... We'll find out, right? But out of two bad options, the one is keep going forward.
Let's turn it to like what we are individually actually doing to prepare for some of this stuff, because you don't want to get caught with your trousers down. So you just shared a couple of changes in your own portfolio you've made, and your own thesis steering you away from like those middle players, as you termed it. Where are you on like the risk spectrum right now? I don't know how
well, I'll tell you, we're recording this on Monday, November 17th, which time-wise isn't ideal because you know what happens on Wednesday. Nvidia reports. And I guess the whole world will be watching that as usual. In one sense, I don't know if you agree with me, I cannot see a world in which their, actual numbers that they report are anything but, absolutely out of the world because of all the other companies that have already reported, right? Plus the increase in spend. Maybe the thing that will be terrifying is the guidance. But again, I don't think it's mathematically possible, right? For AWS and Google and Microsoft to have said we're spending more than ever and we're going to continue spending more than ever. And then Nvidia comes out and says, sorry, our numbers ain't too great. So I mention that only because I'm trying to stay grounded in a kind of mathematical reality. To get to your question, what am I doing in preparing for a potential bubble? I think so far I've kind of done not that much because the majority of my investments, as seen in The King of the Jungle, is all these plays. I have EOS, which is now looking like incredibly important and central to all of these AI data centers power build-outs. So that I haven't touched that. My iron position is still very high. I added to Cypher because of the recent drops. So I'm trying to take advantage of this volatility, saying I think this is a passing moment of fear. And everything else, I've kind of stayed the same, just cutting some of the lower tier players. So I have not yet made any moves in terms of risk off. I'm kind of betting the other way at the moment.
Okay, that's cool. Yeah, like I hope that works out. I've not made any big changes. Like I've certainly not done like a Peter Thiel or a Burry or a SoftBank and like got completely out of like major positions. But I have nudged my own portfolio around a little bit. And so I have got more risk off. But then you and I are in like different stages as investors. Like I live on my portfolio, right? If it's I can't live on the Patreon earnings just yet, so I got the bills to pay. So so I've nudged my cash allocation up from about 17 and a bit percent to over 21% with a couple of trades I've made in the last 2 weeks. Should I give you a quick whirlwind tour of what I've done?
Say that last bit again, Badge.
Oh, sorry. Should I give you a quick walkthrough of what I've done?
Oh yeah, absolutely.
Yeah. So a bunch of stuff. Like I tweet about this stuff. So go check out like my ex at 7 Luke Hallard, and you see like a nice thread of every month, every mid-month, I give like an update on what I own and the changes I made in the portfolio. Maybe staying with the theme of like the hyperscalers and the big tech stuff. Like I only just added to my Alphabet position back in May, but even that add has like doubled. Like the value of my Alphabet position has doubled in the last 6 months, because I think the market is now waking up to some of the stuff I was saying, well, years ago. But I have trimmed my Alphabet position, but it's not because I don't believe in the future of the company. I just have too much exposure to it. So I've trimmed that down to about a 10% allocation. I said I wasn't going to trim Palantir again, but I have trimmed it again. So now it's a 1% position. I could live on that. If it just keeps doubling and I keep like cutting it in half, we can just do that for like 10 years. That pays the bills. I sold a bunch of stuff though. So I was trying to raise cash, and I've been looking for like easy places to do that. And maybe like linking back to something I said at the top of today's discussion, there's like there are a couple of companies I'm just not tracking effectively in my own portfolio. One was United Health. That's out. But one that probably ties into this conversation is ASML, the guys that make the machines that make the semiconductors. I haven't sold it because I don't believe in ASML, or because I'm a bear on AI. Frankly, I'm just not tracking the company effectively. Like I know I'm not doing like the bare minimum in my mind, which is enthusiastically and excitedly reading the quarterly report, listening to the quarterly earnings call, and then occasionally doing like an industry read across. I'm not doing that for ASML.
So why not? Why not, Batch? Why? Because it's a fascinating company.
It is. It is, but like the stuff it's doing doesn't excite me. Like I know, like the stuff it's doing enables stuff that excites me. So I'm excited by, what Tesla are doing and what Nvidia are doing with the machines that ASML helped them build. But maybe ASML, I'm just finding it's just like one step removed, that I'm just not like, eagerly like a geek reading on my favorite like tech blogs and websites about like the latest generation of hardware and what it can do, because it's sort of somewhere back in the supply chain. It's like I wouldn't be interested in the guys that are actually like mining the raw materials. That doesn't interest me at all. But like, it's incredibly important still. I did one other change as well. I sold Snowflake, which I've owned for a couple of years. Kind of the same reason, like I'm not tracking it well. But I do actually have a foundational reason why I've exited this one. It's been on my like to-do list to sell for some time. Like if AI plays out the way I see it playing out, I just don't think we're going to need tools like the Snowflake data cloud. Like we just need sources of record. Companies will just need, somewhere where they have, I don't know, a list of all their employees and their national insurance numbers, or, their social security numbers and like date of hiring and various other information. And if you have all that information in like a structured thing somewhere, like a source of record, you'll then use AI to do fancy reporting, draw inferences and analytics, and like correlate random bits of data and come up with like business ideas. You don't really need like data warehousing and some of the stuff that Snowflake does. Plus, the real AI guys seem to be leaning more on Databricks, which is a private company, which is on my shopping list. So if I can buy Databricks, I will. But I just don't feel like I should own Snowflake right now.
Yeah, curious. I had a little more bullish take on Snowflake, but I had studied it pretty intensely some while back. And then, though simultaneously, it became too complex to remain expert level enough to keep following it. I worry about any software that, has AI at its center, as you heard me say many times. So I think all things being equal, that's a pretty fair position to cut from your end for the reasons you gave. No, you won't hear me screeching at you for that one.
I did buy a couple of things. I bought Mercado Libre. I think I talked about that a little while ago. And you and I talked about Uber last week. I've actually now bought that twice already because I wanted it in 2 different portfolios. So I'm not just selling, I'm buying a little bit, but kind of bringing it back to where we started, like net, I'm increasing my cash allocation, and I'm probably still going to take like another % or 2 out of Rocket Lab at some point. I'm just trying to hold off doing that for now.
Yeah, I mean, it's huge. It's a huge position for you. So yeah, that sounds wise.
So Krzysztof is risk on, Luke is going slightly more risk off. But maybe something to read into this is like neither of us are making, well, I don't want to speak for you, I'm certainly not making like massive fundamental changes in the nature of my portfolio. I'm just like nudging things in a certain direction to match my kind of conviction and my thoughts about the medium term.
Right. And it feels like what I'm trying to do is I'm sensing that this moment is one of these manufactured fear moments intended to scare people out, whereas the long-term trend and momentum is going to continue to be up and into the AI sector. And so I'm continuing to back and add to my positions in the AI dominated space, the batteries, the data centers, call it the makers of the plumbing like Astera Labs. And I'm guessing that a month from now, those things will actually be higher than they are now. So because the AI train ain't stopping. I think that's, yeah.
And like we did the King of the Jungle review last week, and you soundly like trounced me with your 380% return. Like if the AI bubble doesn't burst, you are absolutely going to win like year 3. Well, notwithstanding what our Patreons do with their community portfolio decisions. But yeah, you're gonna beat me because you're much more risk on with your portfolio and have much more exposure to some of these themes. But I think in like a normal year, when things aren't going crazy, I feel like my portfolio is better positioned.
Yeah, let's see how this shakes out. One of the things that you saw me doing maybe over the last month or 2 is I opened up a position in PayPal. And I'm kind of using that to think of as a bucket into which, when I'm ready to sell some of the AI stuff, a lot of bananas are going to flow into that because it's hugely undervalued. And, my thesis is that there's already lots of signs that the growth is returning and so forth. And it's completely unrelated to AI. So I have this space for, to catch all the bananas that are out of the bubble, the AI bubble stuff. And that's how I'm thinking of beating Badger for round 3 is that I'll either the AI stuff continues, like you said, that would position me to have the better returns, or, and this is more of a timing thing, that I'll sniff out the bubble if it's popping quick enough, let's say, and reallocate those sources to a position I'm ready to become much bigger. So let's see what happens.
Like these are times, I think I've said this in recent discussions, like when valuations are like they are right now and when volatility is like significantly higher than historical volatility, which is, again, is right now, these are the times when you want to keep a steely eye on your portfolio and like a firm grip. So I'm using tools like Fiscal.ai like daily just to look at my portfolio, look at the valuations of the companies I'm in, certainly to be like checking in as they're reporting. As you say, Wednesday, a big day coming up with Nvidia. because you need to be reactive, or you could not reactive. That's the thing you don't want to do. You need to be prepared, and you want to be able to respond if like finances start telling you that the game may have changed.
Exactly. No. I mean, that's a decent investing principle. Just be prepared, and try to take advantage of things. I made a X post. It wasn't. I didn't spend too long on it, but it seemed obvious, and sometimes the obvious needs to be repeated, which is that people confuse price and value, and when things are going down, they start panicking. But when the value remains obvious, then when the price goes down, you're getting value. I mean, you're buying a company at a better value. And that volatility in that way is your friend. This is what so many people don't get, right? Because they only focus on price. But when you could see clearly that the value of your company has just increased, right? Because, say, EOS, just to use my old, my battering ram, when there's no world that I know of where they will not sell all the batteries, that's becoming more and more clear, where they're saying we're ready to scale our lines more and more quickly, and simultaneously the price drops, last week 40% or something. My guess is due to market manipulation shenanigans. Then that's not a moment to be fearful. That's a moment to say, oh yeah, 3 years from now, the me of 3 years from now is going to be really proud of the me of today that was able to see that so clearly. And unless, right, a black swan thing happens in which all of a sudden the US grid explodes and AI drops dead in its tracks and China takes over. So, okay, well, then we have other problems then.
Sure. Cool. All right, very good. Hey, good. If you're not following us on the X's, go check out Krzysztof's X. He does post like some memey stuff and some wisdom. He is at 7 Flying Platypus.
Yeah, I post some memey stuff sometimes, and every once in a while there's a kernel of wisdom coming through. You know what I've been posting about, Badge, recently? This is my latest kind of obsession might be too strong a word, but I've now spent, I don't know, 30 hours researching ticker GNS, Genius Group. I'm assuming, Badge, you haven't heard of or haven't explored this phenomena, have you?
Nope, no idea.
This is to me GameStop 2. It's the same underlying factors. There's a company that, well, from the stock side, the bet here is simply that let's call it buyers or retail are going to bid up the shares because they believe what the company stands for rather than, say, the business itself. And what the company Genius Group stands for is what the original GameStop saga stood for. At the end of the market trading day, on Friday, Genius Group filed an actual lawsuit against Citadel Securities and Virtue Americas, which are two large market makers in the US. And they have been gathering data for over 3 years that they claim in this long 35-page filing absolutely categorically proves that these market makers were, one, spoofing GNS shares, meaning they're faking orders and canceling instantly to kind of psych out the direction where the stock's going to go, and this way basically cheating and robbing retail investors. They claim they have categorical proof that these institutions were using systematic naked shorting, which is in violation of the law. And essentially, I mean, this is literally illegal under the law, flat out manipulation. And they're saying they have enough, they have enough data to take this to court. They hired the biggest bigwig lawyer in all of this, Wes Christian. They said they're ready to fight this with massive buybacks and selling their Bitcoin, and they're basically ready to go to war over this. I've been following this for over 2 months. I added a tiny position in the King of the Jungle for kind of, as you might say, the lulz. But, because I remember during GameStop days, to me, it was absolutely fascinating because it ends up being not just about learning how the market actually functions and all the behind the curtain shenanigans, but it reaches a whole nother level of, the little guy versus the big guys, and why do the big guys always win? And when you could prove factually that they broke the law, who's going to regulate that? And are we in sort of just a moment of time where it doesn't matter if you're breaking the law because you could do whatever you want? And that kind of legitimate populist anger that arises in moments like this, to me, is important. I don't know, maybe I'm a sucker for this kind of story where I want the little guy, to win sometimes. And now you have this company saying, okay, we're fighting, and we're fighting in the open. We're named, we have the paperwork, so let's go. There's a lot more to it. My God, there's a lot more to it. It's really, really complicated. So I posted on our Patreon some links and accounts to follow to get caught up with this. I don't know, Badge. I'll pause there to see if there's something that you want to mention.
I guess you haven't talked there about like who Genius Group are and what they do, but maybe that's like secondary to this legal battle. So if you're owning stocks, you can feel like you're part of like the resistance, the one battle after another crew, then go for it.
Yeah. In this case, so GNS is a small market cap company. It's kind of a Bitcoin treasury and an education company, and they have these conferences in Bali and building Bitcoin cities. And from an investment standpoint, I really don't think there's much there. I would never in a million years touch this thing as an investment per se. But simultaneously, I really like the CEO. I think he's a guy that's legitimately trying to fight a case for his company because he has all the evidence he needs that his company has suffered massive losses over a period of 3 years because the hedge funds decided they're going to target this little Bitcoin company and drove it into the ground, breaking the law to do so. So I like the CEO, and maybe second tangent to this. You talked about this, I think, at some point regarding Robinhood. There's the things that are illegal, the spoofing and the naked short selling, creating shares out of thin air just to drive the price down. And then when you're asked to give those shares back, you don't, because the law, because there's nobody to slap your wrist. So literally, making the price do whatever you want and suffering no penalties. So there's that side of it. But then there's all this stuff about PFOF, which is, payment, what is it? Payment flow, order.
Payment for order flow.
Yeah, paying for order flow, where you kind of have this sense where Robinhood, the way I understand it, the way I think of it is Robinhood is in bed with some of these larger market brokers. They pay Robinhood to basically direct retail orders to them. So it's kind of like sliding them, some cash under the table. The retail investor doesn't know. And the retail investor thinks that they're always getting the best possible price on the market. But in reality, they're sometimes getting a good price, but sometimes the call it the briber, market maker, because they're getting a cut from Robinhood, they're actually taking a little skimming off the top between the bid and ask price, and that leads that's not technically illegal. It's but I think it's one of these market structures that is behind the shadows, and and it's a conflict of interest, right? How else can you say it? You know, when somebody's taking kind of a bribe and saying at the same time, we will always act in your best interest, not the person who we're taking money from, you kind of stop and think like, really? I doubt that. And so people are getting they're being lied to in a sense, and it's one of those things where, like Robin Hood says, you know, all trades are free, and that is true. But when all trades are free and they're making money, who's the product? You're the product, right?
I seem to recall telling you all this stuff when you just told me you had all your accounts on Robinhood, rather than what I would term a proper broker. But there we go.
Yeah, well, see, this is where it gets messy. I wish the world were so black, you know, black and white, where it was easy to say proper broker. But now, mind you, so great example, Badge. I'm glad you said that.
So
I like using.
I like. Can I jump in? I've got a hard stop in like a few minutes because I've got my charity meeting.
Okay, right. Okay, so I'll land this by saying, sure, you could say get a proper broker, monkey, but guess who took away the buy button from GNS over the weekend? Charles Schwab and Fidelity. You know, I don't know where IBRK is in all this. Probably not looking good either. So in the vast world of these market makers and the manipulation, I think it's all kind of skeezy, and it's a U.S. centered problem. And I love that GNS is taking the fight to these guys. So if you want to, so my recommendation is watch Dumb Money again and throw some coin at GNS, and maybe, you know, it'll have a GameStop moment, and we'll see what happens.
Oh, very good. So in your mind, like in the Citadel boardroom, they're saying like "Hail Santa," and they're gunning for the little guys.
Yeah, well, now, I mean, this is now, I believe, the first time where it's like everything's in public. The documents are going to be by everyone. The journalists are going to, you know, like I'm sensing a kind of round two. Yeah, where all the names of plaintiffs are and the data that they've been collecting will be actually presented and incontrovertible. So let's see.
Great stuff. Good luck in your joining the fight.
Thanks. I'm excited. Rawr, get the pitch. Monkey's got his pitchforks. All right,
we got to round it out because I do have a hard stop for some other stuff I'm doing. But I do want to give a quick apology to all of our listeners, but particularly 18 Beers Schneider and Murterman 1556. We had some weird audio ghosts in the machine in last week's episode, and apparently, like, ghosts are saying, like, hot dog and other random stuff as the episode plays. So apologies if you caught that. We think we've nailed the audio issues because we've just migrated to a different recording platform, and I think I may have screwed up the Commodore settings. So hopefully we don't have, like, ghostly hot dogs in this week's episode.
Yeah, I don't buy your innocence here, Badge. I think you're subtly trying to infiltrate Monkey's anti-Greg sludge sausage rolls, and you're just here. This is some weird psyop subliminal business you're trying to pull, Badge. I don't like it. I'm with the crowd. Get this man audited.
Totally unintentional. Before we wrap, also though, I think when you guys hear this episode, we will be almost into Black Friday, and a couple of partners of the show we want to call out in particular. Our partners at Fiscal.ai have an incredible deal. They only provide discounts, like definitely no more than twice a year. And this is one of them. Going into Black Friday, you normally get a 15% discount. You'll be able to get a 30% discount on all your paid plans if you sign up to fiscal.ai/wildlife. That will be doing us a little bit of a favor. So go get your big discount. And then another tool I want to call out too that I am a fan of. I know you don't use these guys. I'm a fan of Portseido. Same Black Friday. Our friends at Portseido are doing a 40% discount if you sign up during their Black Friday period for your first 3 months. So get 40% off of a paid plan with Portseido, get 30% off of a paid plan for life with Fiscal.ai. These are tools that Krzysztof and I both use Fiscal.ai. I use Portseido. They're really essential parts of my investing toolkit.
Yeah, if you're a serious investor at this point in 2025, you are using Fiscal AI. So you have one question: are you a serious investor? Are you ready to, step your game up with us as your guides? And if the answer is yes, you're getting yourself to Fiscal AI. I mean, it's not that it's not that complicated.
Great stuff, Krzysztof. Well, are you ready to be a beast of an investor?
I was born ready, badge.
Steel yourselves. Let's steal our portfolios and try and stay ready through whatever this cycle throws at us. Until next time.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.